Good afternoon, ladies and gentlemen. Welcome to the ASHTEAD Technology Holdings PLC half-year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so, and these will be available via your Investor Meet Company dashboard. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to CEO Alan Pirrie. Good afternoon, sir.
Thanks, and good afternoon, everyone, for joining us. My name is Alan Pirrie. I'm the CEO here of ASHTEAD Technology, and I'm joined this afternoon by Ingrid Stewart, our CFO. So our plan is just to run through the slide deck here, and then we'll open up to Q&A. It's a really exciting time to be involved in the business. We're trading strongly. We've got a great opportunity to capitalise on the long-term growth drivers. In the first half of the year, we've grown revenue by 57%. 41% of that was from organic growth, 14% from the acquisitions that we did at the back end of last year, and we got about 3% from favourable FX. Across the two end markets that we service, we increased revenue from offshore renewables by 74%, and we increased revenue from oil and gas by 50%. We increased cost utilisation by 1%. We increased pricing by 22%, which drove a 5.4% increase in gross margin to 78.8%. As we look forward, the business is really well placed to capitalise on the market opportunity in front of us. We invested 8 million in the first half of the year in CapEx, and we forecast to spend 20 million through the full year. We increased headcount by 11%, predominantly in technician roles, and also bolstered the sales team to deliver continued growth. We appointed our first HR director that we'll make some comments on later. And we also fully integrated the two acquisitions done in 2022, HireTech and WeSubsea, and we're already getting strong synergies from both of those. And we continue to build out our R&D pipeline. Encouragingly, tender activity or quote activity in the first half of the year was more than 50% higher than the prior period last year. We've traded strongly. We've got increased confidence in the outlook for the business, and the board expects the FY23 outturn to be comfortably ahead of its expectations. Before we get into the financials, there's a couple of slides just by way of sort of background that we'll run through. Just as a reminder to maybe those who haven't followed the story for too long, we are a subsea technology rental and services business. We support the full offshore life cycle. We play across both oil and gas and wind markets. We're the market leader in what we do. We've got a long track record. The business has been in existence since 1985, and we support all the major subsea contractors globally. Our fleet consists of over 19,000 items. It's highly mobile, and we're able to quickly adapt to changes in end market and geographic dynamics. In terms of the two key end markets that we service, 67% of our revenue comes from oil and gas, and the focus there is very much around operations and maintenance, and then field life extension. And we have deliberately bought businesses through M&A to focus further on decommissioning. In offshore renewables, which for us means wind, 33% of our revenue is coming from that market. And at the moment, the focus is very much on site characterization, construction, and installation, given that industry is in its infancy. It takes about 1 to 2 years to build an offshore wind farm. Life expectancy is about 25 years, and then it'll take 1 year to 2 years to decommission it. So as the installed base increases in scale and starts to age, we see a great opportunity in operations, maintenance, and field life extension, which would be a new market for us. In terms of competitive advantage, what makes ASHTEAD Technology unique, we continue to build unrivaled capability, which widens and deepens our competitive advantage. We've got a great opportunity in front of us, not only to drive financial performance, which we've done through the first half of this year, but also to scale the business. At the heart of everything that we do is to increase customer relevance, to do more for them, to increase higher propensity to rent, plug the skills gap, and also to make sure that we minimise the cost of failure. We've got a strong team internationally, which we continue to grow. We've got the largest independent fleet in the market. We're a trusted partner through an expertise to our customers. We continue to build our capability, both through the use of CapEx and through M&A. We're plugging technology gaps to be bigger and stronger, and we're very much focused on project efficiency and a commitment to quality, which is driving benefit to our customers. We've got 3 service lines: survey and robotics, mechanical solutions, and asset integrity. Survey and robotics service line is electronic equipment rental. That's where the business started from. It now makes up about 58% of our revenue. Mechanical solutions has been built out recently through M&A. That started in 2017, and that makes up roughly 35% of our revenues, and the balance is coming from asset integrity. The real difference that we can create for our customers versus our competition is in the bullseye in the middle, where we overlap survey robotics, mechanical solutions, and asset integrity. That is our key focus area. That's where we differentiate ourselves. And as we look at M&A, and as we look to buy additional products and services to add to the mix, that is the area we're very much focused on. I'll turn it over to Ingrid, who will talk us through some numbers, and then I'll come back and talk about the market and some operational aspects.
Perfect. Thanks, Alan. Good afternoon, everyone. I'm delighted to present another excellent financial performance from the business. The momentum that we saw through the back end of 2022 very much continued into the first half of this year. We saw year-on-year revenue growth of 57%, and that resulted in EBITDA growth of 92%. We're delivering record margins of 31.4%. That's up from 25.8% in the prior year. And then we drop that down to earnings per share. Our earnings per share of 14.2 pence, is up 72% on prior year. As Alan said, we've increased our cost utilisation. We've also increased pricing, and that's what's allowed us to drive these increases to our profitability. And that has allowed us to also increase our ROIC from 19.1% to 25.5%. A strong financial performance has also allowed us to reduce our net debt leverage to 0.7 times, providing balance sheet flexibility to allow us to continue to invest both organically and inorganically. This slide here just demonstrates the strong growth trajectory that we have in our business. The 3 graphs are our revenue, our adjusted EBITDA, and our adjusted EBITDA, and the left-hand columns on each of those graphs is our full year results, and then our half-year results, both last year and this year on the right-hand side. The full year 22 and the half-year 22 yellow editions are pro forma for the acquisitions that we did at the back end of last year. So as you can see, the organic growth has been very strong in the first half of this year. The business continues to deliver consistently high EBITDA margins of around 40% plus, and EBITDA margins in the high 20s, low 30%. On a P&L, our revenue growth of 57% can be split 40.5% organic, 13.9% from M&A, and then with a small balance from FX. And as Alan said, when we look at that from a market perspective, 74% growth from renewables and 50% from our oil and gas revenues. 33% of our revenues now come from our renewables business, and that is up from 30% in the prior year. Our margin increase to 78.8% reflects the growth in rental revenues, increased pricing, and economies of scale. We've maintained admin costs at 37% of revenue, and this is in line with prior year. And for those of you that have access to our internet address on the investor page, if you look there, you'll find an appendix that's got a breakdown of the overheads. We've also increased our depreciation, and that's following the increased investment in our fleet. When we turn to cash flow, this business has a very strong cash flow, and our operating and free cash flow conversion is very consistent with the prior year at 80, 31% respectively. Our working capital outflow in the period comes from significant uptick in activity, with working capital representing 9% of trailing 12 months revenues, which is very much in line with our expected range. We've also continued to invest in CapEx in the first half with an £8 million spend, and we've forecast to spend a full year CapEx of £20 million. We further strengthened our balance sheet, reducing our net debt leverage to 0.7 times, and that, alongside the increased facility that we raised earlier this year, allows us to have significant flexibility to continue to invest in the growth of this business. And then finally, on capital discipline, our strategic priorities remain the same as they have been since we IPO'd. Our number one growth is from organic fleet, and we continue to invest in building out the breadth and depth of our offering. Secondly, with the Waste Subsea and Higher Tech acquisitions now fully integrated, we're turning our attention again to M&A and continue to review quality M&A opportunities. And then finally, from a shareholder return perspective, as per previous guidance, we have not proposed an interim dividend, but will continue our small, progressive dividend policy with a focus on paying a final dividend only in the medium term.
Great, thanks, Ingrid. We'll now turn to the market. We are seeing significant increase in activity. This is creating a strong growth runway for us, not only through the course of this year, but into the next few years. And we're seeing customer backlog increase which is multi-year backlog. For those who have followed the story since IPO, the graph on the left-hand side is one that we've consistently shown, 12% CAGR, 22 through 25, and we call out the offshore wind growth of 24%, which is significant. On the right-hand side, we've pulled out a cross-selection of ASHTEAD Technology customers that during the first half of this year accounted for 38% of our revenue. And as you can see from the graph, they've increased their backlog by 80% over the period 2020 through 2023. That is significant in that it creates the growth runway for us going out the next 2 or 3 years. But importantly, they continue to build the backlog, and the market tone is very positive. Record backlogs, high tendering activity, increased pricing, and the like. We've added a couple slides this time around, one looking at oil and gas, and at this point we're looking at greenfield investment. So whilst our focus is very much in inspection, maintenance, repair, and then decommissioning, there is still significant investment in greenfield activity in oil and gas globally. The forecast this year is $120 billion US, of which 75% has been sanctioned year to date, which is running 35% higher than the last 8-year average. If we look only at the North Sea, there's very little greenfield investment in the North Sea. However, our Norwegian cousins are seeing significant investment given the tax breaks that was introduced during COVID to stimulate the Norwegian economy. And as we look at our business globally, there is significant investment ongoing in the likes of Brazil. Guyana is opening up, and there's also significant activity ongoing in the Middle East. So, whilst there's regional variations here, we've got a very, very strong oil and gas market in front of us. In terms of offshore wind, the capacity that's to be auctioned this year is at an all-time high. The UK has been a leader in offshore wind. 40% of all auctions have taken place in the last 8 years in the UK, but the rest of the world is catching up. And today we're working on projects in Asia, in the likes of Taiwan, and we're on the east coast of the US. If we look at 3 offshore renewable businesses, NKT, Subsea 7, and Prysmian, they've increased their backlog by 135% from 2020. The key thing for offshore wind for our business is our equipment fleet is highly fungible. It's about 85% fungible across oil and gas and offshore wind. And we're being pulled into the wind market by our existing customers. So never before in the history of this business has there been a situation where there's been significant activity, not only in oil and gas, but at the size of the offshore wind market continues to go from strength to strength. If we turn to see the impact that that's having on our business, year to date, we have, or certainly in the first half of this year, tendering activity was running more than 50% higher than the prior year. We increased cost utilisation by 1%, and we also increased pricing by 22% through that period. In terms of things that we've been doing to sustain and grow the business further, we've been continuing to invest in our people, in our equipment, and in quality. We're delighted to say that we've recruited Christine Cochrane as our first HR director, and we see the opportunity to attract, retain, and develop talent to this business as being key to the future. We've increased headcount by 11% year to date. We've invested 7.7 million in the fleet. Our forecast for the full year is 20 million. And that's been increased from a budget of 15 million that was set at the end of last year. The increase being a result of the opportunity that we see in front of us. Our focus remains very much on quality. We recently went through ISO certification for quality, environment, and HSE. Actually, having external accreditation on our systems and processes is an important aspect of what we do. We're delighted to say that we have made really great progress with the two acquisitions, HireTech and WeSubsea, that we bought at the back end of last year. Both of these acquisitions have very much supported the mix, both in terms of products and services that we are delivering here at ASHTEAD. We bought both of these businesses at sensible valuations. We paid 5 times EBITDA for WeSubsea, 4.9 times for HireTech. The rationale for both of these deals was very much the same, which was they were highly complementary to our mechanical solutions business that we're building out through M&A. We fully integrate all the deals that we do. The theory being that we trade as one brand, ASHTEAD Technology, we act as one team, and we drive synergies across our business by being one brand, acting as one team, and being one voice in the marketplace. In terms of international expansion, we've already moved some of the WeSubsea fleet across the geographic footprint that ASHTEAD Technology has. In terms of HireTech, we've been a bit slower in internationalizing that, just given the demand that we've had in the business. The thing that really gives us the most comfort is through both of these acquisitions, the teams that we've acquired have integrated exceptionally well, and customer feedback in terms of service and quality has been great. M&A is a key growth driver. It was one of the four growth drivers that we came to market with in November 21. We operate in a highly fragmented market, and we see M&A as a great opportunity to scale this business and broaden the depth and reach of it, all to be more relevant to our customers. So what are we looking for? We're looking for strong cultural alignment. We're looking for market-leading expertise, ideally businesses that have got long-term customer relationships that we can benefit from, opportunities to grow the service lines that we've got and to increase regional capability, and also pull through revenue synergies is very much important to us. We're not a house of brands. We're not here to collect the businesses. What we're here to do is scale this business and to differentiate it through the mix of products and services that we can acquire. So we're very much focused on that bullseye that I talked about earlier. The key theme here is to remain very disciplined. We're very focused not only on buying businesses at the right valuation, but making sure we buy businesses of quality and that we're very clear on what we're going to do with them and how they're going to make ASHTEAD Technology a better place by the time we acquire them. And then finally, if we sort of wrap all this up, we believe we're very well placed to benefit from the long-term structural drivers in our marketplace. The business has traded really strongly year to date. Activity levels are high. We've expanded the fleet through the investment we've done. We believe that we're strategically well positioned. And as a result of all that, we've got increased confidence in the outlook for the business, and the board expects FY23 to be comfortably ahead of its expectations. Thank you.
Alan, Ingrid, thank you very much indeed for your presentation this afternoon. If I may just jump back in there. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Ingrid, Alan, as you can see in the Q&A tab, we have received a number of questions throughout your presentation this afternoon. And thank you to all of those on the call for taking the time to submit their questions. But guys, if I may just hand back to you just to read out those questions and give your responses where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Okay.
Yeah, so let me just go through those. So what support, if any, does ASHTEAD Technology receive from FTSE listed ASHTEAD Group, and at what cost? Alan, maybe you can give some detail around the background on that.
Sure. So the business was acquired from ASHTEAD Group in 2008. And at the point of acquisition, we had a services agreement with them, which expired during 2009. So there has been no involvement with ASHTEAD Group since 2009.
So great to see the growth from recent acquisitions and plans for more. If so, how much you look to fund them and what areas would you look in? So I think Alan covered the areas that we'd like to look at, but just in terms of funding, earlier this year we closed £100 million RCF facility with a £50 million accordion. We increased our banking club from two, which was HSBC and Clydesdale, to include ABN, AMRO and Citi. That facility goes out to 2027 with some extensions on top. Currently we have just under 30 million of that drawn, so there's significant kind of RCF available. The rationale for raising that was purely to look at further M&A. We're very focused on maintaining leverage at 1 to 2 times, and certainly no more than 2 times. If we were to find a bigger acquisition that needed more funding, we'd obviously now also come out and look at the equity markets as well. We sound very positive for the outlook. Geographically, where do you expect to see the strongest organic growth?
So we are very positive about the outlook, and we see opportunities to grow our business organically across all 4 regions that we operate in. So just for those on the call, we have been in Singapore since 94. We've been in Houston since 97. The business was set up here in Aberdeen in 1985. So we've been doing business on an international footprint for quite some time. We now operate from 10 locations around the world. We split it up into 4 regions: APAC, Middle East, Europe, and the Americas. And one of the key things about the M&A that we do is when we buy businesses, they're generally from owner-managers, and they're generally regionally specific. And one of the great opportunities that we've got is to internationalize those across the international footprint that we've got. But whether it's oil and gas or offshore wind, there are opportunities to grow this business across all 4 regions that we operate in.
The next one, how has the headcount of the group changed over the first half, and how many have been placed in sales, and how do you see this changing over the second half?
So we've increased headcount by 11% in the first half of the year. We're sitting currently just under 300 employees. 60% of the additions in the first half of the year were into technical roles, so technicians both to support base operations and to go offshore. And that is to support growth. We've added something like 6 positions to the sales team. The business is really well placed to drive growth. We've got a structure in place whereby we don't need to significantly increase headcount to support higher growth, albeit the focus is very much continue to build out the technical team.
Could you please make a comment about the competitive environment?
So we've got 2 aspects to this. In terms of survey and robotics, our biggest competitor is our customers because they own roughly 65 to 70% of the equipment in the marketplace. In terms of actual competitors in the rental space, we've got 3 main competitors, both international and outlook, all private equity backed. We believe we've got a market share in that market of sort of 25 to 30%. When it comes to mechanical solutions, the market is highly fragmented, which is creating the opportunity around M&A, and we don't really have any competition other than some of from our customers in terms of what we're doing in asset integrity. But when you look at ASHTEAD technology, we are very differentiated from anything else that's out there. No one else has got the scale, depth, and experience that we've got, and nobody's got 3 service lines interlinking the way that we've got them working.
There's a question around tax losses that we had at the end of 22, which subsidiaries they are located in, and any chance that the concerned loss-making subsidiaries become break-even. So the first point in that is that we don't actually have any loss-making subsidiaries. There are some historical tax losses sitting in the group. For various reasons, with change of ownership over the years, those are actually quite restricted in terms of what we can use them for. And they're actually, it's going to take us years to sort of unwind those tax losses. So we're running, I think the effective tax rate in the first half was just over 21%. That's the sort of expected rate for the full years, probably slightly ahead of that. We're looking at kind of a sort of 23 to 25% tax rate going forward. There's a question that's kind of linked to this, which is around where our earnings are split, the geographical split of the revenue. And as Europe is our biggest kind of revenue generator currently, and that's run through our UK entity, clearly we're kind of moving towards sort of UK tax rates. But Alan, do you want to take the geographical split question? What's the geographical split of the revenue, and how dependent are we on the North Sea?
So that links back to the sort of 4 regions that we operate through. So the share across the 4 regions in terms of revenue is 66% Europe, 18% Americas, 11% APAC, and 6% from the Middle East. But when we look at our European operations, they don't only support the North Sea, they also support activity in the Caspian, in the Mediterranean. We do projects in the west coast of Africa, and also Brazil from here in Aberdeen. So we would estimate that less than 30% of our business is in the North Sea. And of that, there's probably half of that from offshore wind.
And that leads nicely to the next question, which how big an opportunity is offshore wind for the company?
So we see a tremendous opportunity in offshore wind. Back in 2016, we did no business in offshore wind. By 2018, 10% of our revenue was coming from offshore wind. In the last half, 33% of our revenue came from offshore wind. And when we came to market in November 21, we stated that our medium-term expectation was to grow revenue from offshore wind to be more than 50% of group revenue.
There's a question here around the interest rates on the RCF. That fluctuates depending on the gearing. We're currently at 2.25% above SONIA. That increases up to 3%. It's not a fixed rate. We haven't hedged. Given the low debt in the business, we made a conscious decision not to hedge at that rate. That's something that we will look at should we do a larger acquisition that kind of ate up more of the facility. Another question here on new technologies. Are there any new technologies coming to market that offer you growth opportunities? And if so, would you have to buy those in?
So in terms of technology, in our survey and robotics service line, all of that technology is bought from OEMs. In mechanical solutions, we would say probably 80% of the technology is designed, manufactured, and assembled in-house, with the balance being bought in. So there is a continual trickle of new technology in terms of survey and robotics, but it's not technology in terms of consumer technology. We're buying equipment, certainly for electronics, that will last 10, 12, 15 years. Technology churn in this industry is really slow, and customers, because they own a lot of equipment, it's not in their best interest to move on anyway. but they really rely on trusted methods. Where we see the opportunities around new technologies is new technologies to ASHTEAD technology as we continue to grow. And that, again, is very much around the mechanical solution space. We've built that business or that service line through M&A. And as we continue to expand that and to have further conversations with customers, there are a number of technology gaps that we're actively plugging. Some of that will be bought in, some of that will be designed and assembled in-house.
And then linked to that, in terms of growth, are there any new regions, specific locations you would like to enter today?
So in terms of regions, we're very well placed to benefit from the geographic footprint that the business currently has. We'd like to be more active in Norway, and to do that, you need to be Norwegian. So that is a focus that we have on M&A. And the other thing would be around offshore wind. Over the fullness of time, to be active or to be, to benefit the most from that market, you're probably going to have to be closer to the projects, which means opening a facility possibly further north in Asia, around Taiwan, or possibly on the east coast of the US. But today we're supporting the Asian wind market very successfully, both from Aberdeen here in the UK and from Singapore. And we're supporting the east coast of the US wind market, not only from Aberdeen, if it's European customers, but also from our 3 locations in Texas and Louisiana.
Okay, there's a question here around M&A, and is it probable that the longer you wait to do bolt-on M&A, the higher the valuation multiples will ultimately have to pay, given the strength of the markets you service, inflationary trends, deep customer backlogs, etc.? Do you want me to I can do that one? Yeah. I think what we're seeing is that multiples aren't necessarily changing, but earnings are. So we're finding that a lot of the conversations we're having, people are generally, well, some people would rather wait a bit because they see the businesses are continuing to go from strength to strength. But from a multiple perspective, fairly consistent with what we've always said on that.
I think that there's a follow-up question that's popped up on the screen, which is, is it probable that the longer you wait to do more bolt-on M&A, the higher the valuation multiples you will ultimately have to pay, given the strength of the market, inflationary trends and the like? But what we're seeing is we're not really seeing too much movement on valuation multiples. What we're seeing is a bit of delay in owner managers who were predominantly buying businesses from just holding back a bit given the strength of the market. And everything is moving in a very positive direction. So it's not really about the multiples, it's about, do I hold this business for 6 months, 12 months longer to increase my earnings so I get a higher valuation.
There's a question in around cash. What's the cash situation of the business currently? What interest rate are we getting and do we invest it? So we typically, we're in a net debt position. I think at the half year, it was sort of around 30 million mark. We kind of tend to monitor or maintain a cash position of around £5 to £6 million. And as we build that cash, we'll just use some of that to repay the RCF. So we typically don't invest it in terms of, we don't sort of actively put that into any sort of saving type accounts. We're just very much using that for working capital.
We've got a question again going back to M&A. What's the top price earnings that you're willing to pay for acquisitions? And so what is it? Without being specific there, we bought HireTech and WeSubsea last year for 5 times EBITDA, 4.9 times EBITDA. And we believe that's a sensible multiple for those type of businesses. For businesses that have got high offshore wind content, we may have to pay a bit more, but we believe that the range is probably 4 to 6 times with a bit more depending on the scale of the business and how much wind content that business has.
There's a question just come in around hedging currency. We typically don't hedge currency. again, we've got a natural hedge in the business. We've effectively trade predominantly in GBP, US dollar and Singapore dollar. And in each of the regions that we operate, we have a cost base in those currencies. And then CapEx is generally either between pounds or US dollar. So, we do, if we are sitting like heavyweight in one, we might sell some US dollars, for example, and take advantage of changes in rates at times, but it's more opportunistic and we don't typically hedge anything. I think that's probably, unless there's any more coming through.
Alan, Ingrid, absolutely. And thank you very much indeed for being so generous of your time then, addressing all of those questions that came in from investors this afternoon. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended. Just for you to review, to then add any additional responses, of course, where it's appropriate to do so, and we'll publish all those responses out on the platform. But Alan, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
Great. Thank you very much. All that's left for us to say is thank you very much for tuning in this afternoon, for following the ASHTEAD Technology story. We've had a strong run through the first half of this year. We're very positive about the outlook for this business, and we believe that the market opportunity provides a great platform for us to not only scale this business, but to drive further financial return from it. And the business is in really good shape in terms of how we're positioned, in terms of debt facility to do further M&A, in terms of the team and the strength that we've got, and from the benefit of investing over the long term in our fleet. So we are very positive about the outlook, and we look forward to seeing you all again in our next results presentation. Thank you very much.
Alan, that's great. And thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of ASHTEAD Technology Holdings PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.